if profit is an outcome of following a good process, once you have a setup and you have a process, then if you follow a process, profit is just an outcome of following a process basically. So in a breakout kind of a process, I have a very simple process, and what I do is I have these two breakout scans which I use. So as soon as the market opens, I am just going through which stocks are having a breakout, and again this is color coded, so you will see that this is green, that means it's bullish, this is red, that means it's bearish. Now in this particular case of this stock, there's a catalyst which there was earnings was 3 days ago, and it reacted very positively to the earnings. It did like a highest volume traded ever. 68 million shares were traded, the float is 249 million, and it has a good catalyst. So this is a stock which I was watching today for possible delayed entry. There is another process which is the anticipation, so which is like a watch list I am creating for finding setups which are likely to break out. This particular stock NVTS, right, and out of the gate it came out, right, and if you look at on a lower time frame, it just broke out, right, and if you bought it like, and it ended up giving up all the gains, and then later the buying came in and it became a successful breakout. Stock has not gone anywhere for almost like and last time it had earnings had 16% reaction, right, and so there is a potential that it will have a reaction, but the important thing is I only look for a surprise if the stock is neglected, and this stock is neglected, right, and at least for a month it is neglected. So then the move become more explosive if it is neglected. Once you have one process and one setup completely under your belt, then start thinking, look, now this process only requires 1 hour. What can I use my time better for? What other process can I do? Ultimately, you become a successful trader when you find a process which works for you.
All right, welcome back everybody. It's my honor to introduce the next speaker of the TraderLion conference, Pradeep Bonde, the founder of Stockbee. He has mentored thousands of traders over the years and is known for developing the episodic pivot and momentum burst setups. Pradeep, thank you so much for being back here. I think the topic you're talking about today is fantastic, talking more about being process oriented, how to develop your processes, and sharing a lot of the processes that you have for your own setups, the EPs and momentum bursts. So first of all, thank you so much for your time, and it's great to have you back.
Yeah, good to have you back. So yes, I want to talk today about processes which is one of the issues which new traders face, and even existing traders or traders always have process kind of problems. Yep.
Yeah, perfect. I think it's really poignant, and you've talked about so much in previous videos and webinars, the different processes that you have set up. So why don't you take it away and kind of run through first, why is it so important to have a process? And then I know you're going to give a lot of examples too.
Okay. So let's go, let me share the screen for this, and then we can look at basically the thing.
Yep, let's dive in.
Okay, so let's look at a process orientation or process flow, because ultimately the goal or the whole philosophy with which I work in terms of trading, and when I even talk to developing traders, is if profit is an outcome of following a good process. So if you have a very good process and a setup, once you have a setup and you have a process, then if you follow a process, profit is just an outcome of following a process basically. And in order to have a process, you need to have first setups. So I define setups into two categories broadly. One category of setups are like home run kind of setups or mini home runs. So in a home run or a mini home run, what you're looking for is moving your account in a large increment in one trade. So say a good example of that would be an EP is a home run kind of a setup. I have a variation of EP 9 million, which is a home run kind of a setup. So one trade will move your account by 20%, sometimes 50%, or at times even 100% plus in one trade, right? And basically the other kind of a thing which I do is really singles, which is basically something where I'm looking for moving the account. Sometimes that trade can move your account just 0.5% on overall capital. And when I'm talking about 20, 50, 100%, I'm talking about overall capital. I'm not talking on that particular trade, right? 0.5% to sometimes up to 5% in one trade basically, right? And now, in order to do this successfully, there is a process flow which is required, and that process is what I will focus on today. For doing something like this, I have a process which starts most important part of this process happens in pre-market or after market. So as soon as the market closes is when companies start announcing earnings, or companies announce earnings after the market opens. So in order to find stocks which have earnings as a catalyst, or a sales as a catalyst, or some news as a catalyst, most of the stocks will also announce any game-changing news or any news after hours, after the market has closed, or like before the market opens. So for this, I have a process which I follow religiously, pre-market and after market, which goes through steps. So I am looking for every stock which has come out with earnings. So for this, what I have is a tab group which I have created. I have selected which website which I am going to use for doing this information gathering, how am I going to do it, in what sequence, and I have a group of tabs which I use for doing this. And this group of tabs basically I'm going to pull that in here. And if you see here, right, when I come in, I open all these tabs in one go, and all of these tabs are what I use in order to find the information which I am looking at. So the websites which I use is Briefings, The Fly, Wall Street Journal, the Morningstar, then MarketSmith, and then nowadays, because AI is becoming a very good tool, so I'm using Perplexity Finance AI tool to research some of these companies. The starting point is always earnings, right? So today, like after the market has closed, there are two companies which are announcing earnings, and you see that they CVGW has already. So I look at these earnings. Whenever I'm looking for earnings, I'm looking for a surprise. So in this case, there is a negative surprise, and there are only two stocks. Or I'm looking for year-to-year revenue to be higher than 39%. Now, in order to show you this, today doesn't really show you anything because there's not many companies. If I go into the history and try and look at basically some of the archives, let's say Wednesday is a good day to look at, right? And when you look at Wednesday, you see that so many companies had earnings, right? And basically, and then you can sort them by year, and you can see the one which I'm most interested are the one which are having a very high sales growth, 39% plus kind of a sales growth, and surprise, right? So this is where I start. So THO, this had a surprise, right? And so that will be the starting point whenever I have this. Similarly, this is before the open, and this is after the close. After the close also same thing, same process, surprise. The one which I have surprise are the one which are going to be what I will research, right? And in order to research them, I use this tool, Briefings, the same website. But here again, in terms of a process, I have created two tabs for this process. So I have this tab which is where earnings are showing, and this is a general all news here, and this is just specific. If you see the filters here, this has been filters, and only it shows certain news. So it only looking at broker research, commentary and earnings, rumors and summaries, while this is looking at everything, right? So this allows me to quickly focus on earnings related news. So I go through this earning related news now. So you see basically news has started coming. KC's general beats by 68 cents and beats on revenue, provides outlook, increases dividend. So now this stock I will go and research further by looking at different sites. First thing I would look for is I would look for what is the news item on this. I would read through this news item. Based on that, I know obviously they had a good earnings and things like that. Then I look at the chart to see if it was rallying into earnings. If it was rallying into earnings, there is no trade, but this stock is not rallying into earnings, right? So there is a probability that tomorrow at least or for next 3 to 5 days the stock is likely to go up. So I'll go into more detail in terms of processing this information. I will look at basically anything which is showing this kind of an information. I will look at basically the I will look at what is the news item and see what was the news on this for a couple of days earlier, what was the news, so that I can research this particular thing, right? I also use
Pradeep, can I jump in with a question?
Mm-hmm.
What could you see in those previous 3 days that would just scream to you, all right, this is a stock to really be focused on.
Yeah, so what I'm looking for is like this stock didn't rally into earnings, right? And there is a big surprise. Like I'm just taking, like I have not had time to analyze this.
Yeah.
This news came in just while we were recording this session, right? So, but here, like this stock has not gone anywhere for almost like and last time it had earnings,
Didn't go
it
anywhere.
had
Yeah.
16% reaction, right? And so there is a potential that it will have a reaction because the per se, if you look at just like the larger numbers, look like an attractive because it's 68-cent beat and it is guiding also higher, also increasing dividend, right? And basically, but the important thing is I only look for a surprise if the stock is neglected, and this stock is neglected, right? And at least for a month it is neglected. So then the move become more explosive if it is neglected. Does that answer your question?
Yes,
Okay.
and also in terms of the fundamental catalysts in briefing or anything, is there anything that you look for that would stand out to say this might be a better trade? Yeah.
So now, like now this is just a news item I have seen, right? And but I will go into looking at like what I call as a X-ray of the stock, which is like to look at the fundamental picture on this stock. Now, obviously, this will not be, this information will not be updated immediately because this is just, this information just came out 1 or 2 minutes ago. But I can see what is happening here. This is like in a stock which is not really, it's projected to grow for the next 4 quarters, and for the kind of retail stock it is, it's a good projection. 9-10% for that kind of a retail stock is not bad, but this is not something which I get terribly excited about. I will get excited if I see something which is 39%, 40%, 50% growth rate. To give you say an example, like say if I see something like this, then I get excited, right? And then I will go more detailed kind of a thing. Now, in addition to this particular, looking at the X-ray of the company cases, I also look at basically on Morningstar. Morningstar is more focused on like valuation, right? And so I always this is something new which I started using this year because I've seen that it helps, like if the stock has a valuation, this thing. So here in this case, Casey General Store is trading at 439, right? And basically, and they are saying that by their valuation metrics, right? And it's like it's not something which is Casey's is trading at 3% premium, right? So it's not like it's very cheap. Like sometimes you find stocks and they're trading at like a very discount to, then look, there is a likelihood that value investors will get interested in this stock and things like that. So this is just an additional layer of information which I use nowadays, and I found some good trades by using this tool, which is their valuation tool basically, where they tell you what is the fair value for that particular stock. So fair value for this stock is 329, and if you see currently it's trading at around 419. So that means the surprise may move the stock, but it's not going to move the stock big kind of a thing, right? So I just use this as an additional tool, and then I use this particular tool. Whenever I'm looking at this particular tool, right, there are certain things which I am looking for. Obviously, the sales growth being very important, but again, sales growth is context specific and sector specific. What is a good sales growth in retail is very different for a sales growth in a technology stock or a consumer discretionary stock. So this is consumer discretionary, but it is basically even a 10% growth rate in retail is good for retail, right? And basically, but I look for also if there is a sudden, if you see in recent time there has been a surge in mutual fund ownership, then that will attract my attention because that's what I look for. Like if I go back to the previous example which I just showed you, right here, you see that there has been a sudden jump from 492 to 642. So there is something, funds are also attracted to this particular thing. So once I look at all this, then nowadays I started using this Perplexity Finance, which is very good for creating prompts. I'll just give you a quick examples of how I'll use this, but I have different prompts which I have created to look for say what is So I would like use a couple of prompts saying, look, what are the analysts saying, what is the bullish case, and then it creates like basically summary, right? And also like I use this to say, okay, look, can you summarize the earnings call for this particular thing. So it just allows you to, rather than reading 20 pages of SEC filing, you can just read a few paragraphs and you get the gist of it, like, or what is the analyst opinion on this particular stock, kind of a thing, or which funds are, what is the fund ownership trend on this. So I have created these multitude of prompts like nowadays, and I use that. So once candidate goes through this vetting, and if I find something which is attractive basically, right, that's when it will go into my next day or same day stock to trade, right? And then when you do the analysis, sometimes you find a stock which is going to go up for next 2 or 3 quarters, and sometimes you find a stock which is just going to go up for 1 day or 2 day, and you trade that accordingly basically. So ultimately these stocks, once I analyze, will get either go into a bucket which will be like either a longer term potential or a bigger potential, or just 10 to 20% potential kind of a thing, right? So this is one thing which I do basically for a process to find a trade, and this process runs before the market opens. By 8:30 I looked at everything. Most of the earnings come in by 8:30. Very few earnings come in after 8:30. So I will have like whatever I do in the evening, I will have a list, like say, if, let's just put in cases as an example there now, because it's gapping up a lot in the post market, I can see, right? So that is one stock which I have now, one idea, right? And basically, so that process is over. Next day morning, I might add 1 or 2 candidate to that particular process, right? So this is one process to find something which are the catalyst for that day. But what I have found is that whenever there is a catalyst, the stocks go up on that day, but many times, because they are having large gaps nowadays, they pull back, and then they offer you an opportunity to enter after a couple of days or a few days, right? So what I do for that is I have a scan which is part of this process only, which I run in the night or in the morning, looking for a delayed reaction, delayed reaction EP kind of a thing. So what I do is I scan for stocks which had a big volume moves in the last 1 month. So what I look for is I think a catalyst is a good catalyst if it makes more than like 4% move on a 9 million shares kind of a thing. So I look for those stocks which have made that kind of a move in the last 25 days, right? And then I create a watch list of those stocks. Going through this, each of these stocks I'll go through. So to give you an idea of, like, can I say, today morning I went through this list and I created this watch list, which was my watch list coming into today, saying these are my delayed reaction watch list candidate for today, and one of them was CCJ, right? Because it had this catalyst here and it went sideways, it was setting up, and then it went up today. This is a stock which I am watching. Now in this particular case of this stock, there's a catalyst which there was earnings was 3 days ago, and it reacted very positively to the earnings. It did like a highest volume traded ever in its entire lifetime. So it did 63 million shares traded or something like that. If you see, 68 million shares were traded, the float is 249 million, and it has a good catalyst and earnings. It has a large order which it has received and things like that. So this is a stock which I was watching today for possible delayed entry. So this is how like this particular process runs, and I create this watch list of stocks which are setting up, which are the catalyst, and they go sideways or sets up. So in case, like say in the case of CRDO, there is a good earnings, it faded on that day after gapping up. Now it might have a delayed reaction, so I'm watching it for the same thing. Same way ELF. So this is a combination of these two processes which I run, and I create a watch list then for the day, or a trading list for the day basically, right?
And to show an example, like if you go back to TC2000, could you bring up APLD? Is this too short of a pause for a delayed reaction EP, that third day I'm talking about. So there's one tight day.
Yeah, but like what happened really is like this is again like there is a 15 billion order, so there is a clear catalyst and the volume is like huge, right? And 239 million shares traded, more than its float traded actually. Now I was hoping that it will set up as a delayed reaction, but sometimes what happens is they don't really give you an opportunity. Where there is a genuine catalyst, you just have to enter because sometimes they don't give you delayed reaction kind of a entry, right? Basically.
Yeah, and this would be an example of something you catch on day one because I think the news came out at 8 a.m. About the partnership with CRWV, and that's what created this 60% move in a few days. Yeah,
and this is again as part of a process. Now, because I know what is the catalyst, I write it down here itself, so that I don't have to go back and look at the catalyst. Similarly, whichever stock I want to like target, like CRDO, the catalyst is earnings. So what I do is I put the projected earnings here and sales and earnings, so that like I don't have to remember. So these are all small process tweaks which I have done, where like what is the catalyst. Like say here I wrote down the catalyst like hims and hers on that day. There was a tie-up with NVO, right? So and this is where it became a delayed reaction kind of a setup. So I go and like as a process try and avoid the trying to remember what is the catalyst and just put it there.
Yeah. Right. And you must draw from your logistics background to some extent when you're explaining this and developing this. Any key takeaways or things you want to mention related to that in terms of how people should think about creating processes for trading?
See, whenever you are creating processes for trading, right, and processes have steps, right, and processes have tools, and processes have like a sequence basically, right. Now, when I worked in logistics, logistics is a very process-oriented industry. Every single thing is driven by processes, right, and basically the thing which is important when you are looking at a process design is you need to master your tools, right. So that's why I only use certain websites. I'm not going to go and look for a random or like keep changing my websites and all. Within that, I know exactly what information I am looking for in briefing, right? And basically, what information I am looking for, like certain information is not available, certain information is available in briefing, certain information is better available in some website. So I know exactly what to look for, right? Also like where to find what information is part of your process flow. So mastering your tool is one part. Second is when you have a process like this, right, and you have to think through. Now when I do delayed reaction EP, and if I have 3 good candidates in delayed reaction EP, right, now if I focus on this particular thing in the first thing in the morning, I'm going to miss out on a lot of breakouts, right, which I'm fine with, because I want to prioritize. If something has a real catalyst and I am really wanting to get into it, I want to prioritize that over running another process. So those are again process related issues which I look for in terms of how process is designed. So some days I make a conscious decision that I'm not going to look at running my breakout scans in the morning, because I have these 3 birds in hand, and those birds are worth more than the one which are likely to show up in the scans.
Yep. And how should traders who are completely new to trading or in their first few years, they don't have processes yet, how would you recommend them start building them and, choose what steps to include, what software to include, all of that? How have you developed and continued to evolve these processes to match changing market environments, new setups? The delayed reaction is something relatively new that you've developed. So how can people create a process and improve it, slowly over time to always get better?
See, I think another key to success in this business is once you find a setup idea, is to have a process which is foolproof, right? Now, when you start developing a process, the first iteration which you do is never going to be perfect, and you have to keep on iterating till it becomes very easy for you to run, and then you try different tools. So I tried out different tools, I looked at all the other things, right? And basically what I want when I train traders, like, and I'm just training one trader now, and I told her to, like, and only focus on writing a process and only following the process basically. The moment she takes a trade out of that process, I've seen that her performance goes down, right? So the process should be written, the process at least in the initial stages, because that is when we are trying to develop the process, right? So the process should be written process. The process should have simplicity in it. That's most critical, because if the process is too complicated, I tried creating some very complicated this thing prompts on that AI thing, but like, it just doesn't work. Simple prompts you create and it works, right? And basically, so those are key to doing it, and when to do what, right? And a lot of time I see a problem with how traders approach, like newer trader. First thing in the morning, you should be ready with your watch list, and then you prioritize that particular watch list, right? Now that process is important. If you're like in the morning, you're starting to look for where is the earnings and what is the thing, and you're trying to find, like, say, anticipation. I run a process called anticipation, but I don't touch anticipation as a process till 3 p.m. in the afternoon, right? So again, the process development part is the most important. And once you have a process and you start following a process over a period of time, over 2 weeks, 3 weeks, months, 6 months, 1 year, 2 years, you will realize which processes are redundant, and you can drop those redundant processes. You try out some new thing. Like every year I try out something new in the process, or every 3 months, and I see like this market, this thing which I am trying out this year is not something which is like basically I was using, but I am trying this out as a tool, as a process hack, to see if this helps, because if it doesn't help, after I evaluate it for a couple of months, I might drop it, right? And basically, so, and then simplify your process. That's the key, right? And you have to keep on simplifying your process.
Yeah, excellent. So that's an excellent run through of more catalyst type trades. What about for the momentum burst and anticipation setups? Would you mind running through your processes for that? That'd be great.
Yeah. So this is like, this is the entire process which will run for this particular thing. For this particular thing, right? And there are two types of trades I will take. Basically, one kind of a trade will be a breakout, which is like basically something which breaks out and like goes up for that particular day, right? And basically which is based on a scan. And there is another process which is the anticipation. So which is like a watch list I am creating for finding setups which are likely to break out. So in a breakout kind of a process, I have a very simple process, and what I do is I have these 2 breakout scans which I use, right? In addition to this, I have the other software which I use, Trade Ideas. So let me run through like the whole process, including Trade Ideas, to give you an idea, right? And so this is a breakout scan which I run, and I start running this as soon as the market opens. So as soon as the market opens, I am just going through which stocks are having a breakout. And again, this is color coded. So you will see that this is green, that means it's bullish. This is red, that means it's bearish, right? And basically, so I toggle between these 2 scans first thing in the morning. In addition to this, I have this entire set of scans which I use in Trade Ideas, which are again breakout variations of breakout scans, which I use basically. And that thing is again, these are simultaneously running in addition to this particular scan basically, right? And because then you can find setups which are like, say today, like Tesla is an example of a trade which I took from this particular scan, because it opened lower and then it started showing up here when buyers came in, and then I immediately went in and bought Tesla for a trade, right? And basically, so I am using a combination of this process to find breakouts basically, right? Now breakouts are something which is like, you don't know, you don't have that stock on your watch list, and it suddenly breaks out, and then I enter that particular trade. So if I had to show you an example from today, right? And so here, like, say this fastly, right? This shows up in my scan today, and I entered this trade when it showed up, right? And this is a breakout. Now I wasn't watching fastly. I didn't add it in my watch list. I saw it as a breakout and I entered it, right? Now, in addition to this breakout scan, which is where I am reacting, right? Because this is a reactive kind of a process where I am reacting to a scan candidate and buying it on the fly kind of a thing. I do an anticipation of breakouts for singles. For anticipation, this particular process runs primarily in the first half an hour, 30 minutes. I want to get into as many breakout as possible in the first 30 minutes. Even though I run it throughout the day, the real concentration for this process is 30 minutes. Now what I do is, once these breakouts and all has come in and all, in the afternoon, there is nothing to do actually, right? Because you're already in trades, you're just managing your trades and all. So at around 3 o'clock, 3 p.m. is when I start looking for anticipation setups for the next day, right? So I have a setup, like I have a scans for anticipation. And in this case, I will have a bullish anticipation scan, and I look for these particular stocks which have like, if you look at the condition, it's just looking for a stock which has basically a momentum and which is up or down less than 0.4%, right? So it's a very tight scan which is looking for stock which has a narrow range day. And then I have even the columns which I use for doing this, there is a certain process. If I am doing anticipation, I have a column which I use which is the net change, and I always sort by the lowest net change and always look for the one which has the lowest net change first, because the lower the net change, the tighter is the candle, right? Or it's like, say this particular stock has a net change of 0, right? And so that's what I'm looking for. So every single column is, again, there is a process involved with it. Like, if I'm looking for buying breakouts, always all my breakout scans are already sorted by volume. These are the kind of process innovation which I've done in. So in the morning, whatever is showing up at the top has good volume and liquidity, right? Whatever is showing at the bottom has less liquidity. Then again, like I have some fundamental scans. So if a candidate which is showing up is in one of the fundamental bucket, then I have this things set up. So everything which is required for me to make a decision is there like a dashboard in this particular process, right? And only thing which are required for me to make a decision on a breakout is there in this particular layout. Now other layouts have other things because I might use them for some other purpose, but here I don't need too much information. All that I need to know is this stock like in bucket 1, bucket 0, bucket 2, or is it part of the IBD 250, just to give it a more importance or things like that. So all these columns, how they are sorted, is again a process which is fixed every day. Same thing I do. Okay. So now if I go through the second process, what I do is this anticipation thing. I go through this process and I look for an anticipation setup here, right? And when I look for an anticipation setup, when I find an anticipation setup, and this is an example of a process innovation which I did. So what I used to do is I used to create an anticipation watch list, and I used to look for buying them next day morning, right? But nowadays I don't really buy them next day morning. If I see a good anticipation setup which I think is likely to break out, I buy them just before the market close, between 3:58 to just 4 o'clock. I will buy an anticipation candidate without like looking for a breakout or a confirmation. Now there are two reasons for this process orientation, process hack which I have done. One, because if I spend the time in the morning with a watch list, anticipation watch list, trying to get into them, I might miss out on this. I might miss out on a good breakout, right? So the processes interfere with each other. A breakout process interferes with a watch list process. So I said like anyway, I am so sure that if this breaks out, I'm going to buy, and I know that people do most of their anticipation work in the night and they try and enter it in the morning. So I just do it at 3:58 and take that small risk, but it frees me up my time in the morning to focus on this and this, right? So this is the process which I use for doing this particular anticipation kind of a thing. The watch list, if I have a good candidate, I would already be in it, that trade basically. So the combination of these two processes run simultaneously, and when a trade shows up, if it is from an anticipation and it breaks out, I would be already in it basically. Right.
And can you show an example of a recent anticipation trade, just for people who aren't familiar with the setup, what it looks like, to basically see a good case study?
Recently, anticipation haven't been working well, but like can I say something like this is a good example of today's this is also was a anticipation setup also, right? And a CCJ.
Yep.
See here, it was up or down like 39 cents, right? And it was here also. I had it in my anticipation setup because it was on this particular day, it looked like this, right? And it was 0.08, right? So that's the kind of setup I look for, where the stock has momentum and it is going sideways, and I have specific criteria for anticipation. I only focus on anticipation setup where the stock is going sideways for less than 10 days. If it keeps going sideways for longer than 10 days, then there is not much of a urgency to get into this. So some of these are where anticipation setups coming into today, right? And some of them deteriorate, like some of them during the day, but deteriorate but that's what I look for. Like this is now becoming an anticipation setup because 2 tight days. Today it is very tight, just down 0.01. So this is something which I already have a position. I already taken a position in this one now, right? So that's an anticipation setup. So for an anticipation setup, what I look for is basically what I call as TTT, which is 3 tight days, right, in a row, or 2 tight days. Minimum 2 tight days. The ideal one will have 3 tight days. So this particular setup in this case is a 2T setup. So there are 2 tight days now. And this can become a 3 tight days. 3 tight days or 2 tight days is what I look for in a setup, basically like that.
Excellent. And I think another great process that I've learned from you, and you've taught many traders, is situational awareness. Situational awareness, your process for doing that. Do you mind running through what you look for and all that entails to help give you insight on that?
So for situational awareness, I have a process again, and this particular process I run in the morning. So this is a morning process, and this morning process is basically fundamentally trying to answer one question. Every day I ask myself a question in the morning: are breakouts likely to work for next 3 to 5 days? Right. So if breakouts are likely to work, obviously you go and load up, right? If breakouts are not working, then you don't you deprioritize, right? So in order to answer this question, there are certain tools and processes which I use, and one of the tools is market monitor, right? And in the market monitor, I'm looking at what is the breadth of things in the market, right? So here this is the market monitor, right? And in the market monitor, you will see whether buying is coming in or selling is coming in into the market, right? Whenever there is buying coming in, like currently there's buying coming in, so breakouts are working. Some breakouts are not working, but more or less breakouts are working because money is flowing into the market. Basically, this is a indicator of money flow into the market, right? But in addition to this particular tool of market monitor, I also have a new tool which I have been using, and which is a study 20% study. So this 20% study is basically, and this is plotted on SPY, and this you can only do in TC2000 version, platinum version. You can't do it in the normal version. But here what it is plotting is, it's plotting below SPY the number of stocks in the universe of Warden universe of stocks, right? And which have up 20% in last 5 days, right? So when you see extreme readings, like this was a 200 plus day reading, right? That was a 234. You see that the market had a correction, right? Now here, this was a 200 plus day, and in the short term period, like here recently, we had 200% plus day, and then the market had a pullback, right? So whenever this is like an oscillator, right? So when the readings are low, when the readings are below 20, I'm very bullish. And when the reading go to the extremes above 100, I become less and less bullish because that indicates that in the short period of time, you're likely to get a pullback. So using this particular methodology and tool, like a 20% study, which is like looking at how many stocks have gone up 20% in last 5 days. And in addition to that, the third thing variable is just the trades which I am taking, right? If they are having a follow through. If I see 3 trades in a row not having a follow through, I know that there is some problem in the environment, right? Because the setup is not a problem. Traded this setup for 25 years, right? So as a result of having this logically going through this, I answer this question either you look at a yes. If it is yes, then you go buy breakout, or maybe, or select breakouts are working. Then in that case, you become more selective. You like are only selecting breakouts with some catalyst or only A quality setups. You don't, or reduce your exposure total. And if the breakouts are not working, I just don't trade if the breakouts are not working, right? And basically, in addition to this, like that's just the fundamental question: are breakouts likely to work for next 2 to 5 days, right? There is another question which I ask, right? And one of the things which I have discovered for trading over many years is if you can get into a breakout as early as possible, or like what I call it, find and enter early. If you can find and enter early, it's very good, right? Because instantly you are profitable and the trade is just you are just using market money to make money then, right? So I asked that second question: is find and enter early better here, or waiting is better? So if I see that, like what I've been seeing in this market is every day morning, right? Nowadays, almost for like in the last 1 week, even if the market opens positive, it sells up till 10 o'clock, 10:30 or 10 o'clock, and then the move starts. Like even today, you'll see the market sold up, and then at around 11 o'clock, this is like almost like a cycle which is happening. So if you buy a breakout early, what happens? You get stopped out, and then the stock goes up. Like good example of that today I can show you is like this particular stock NVTS, right? And out of the gate it came out, right? And if you look at on a lower time frame, it just broke out, right? And if you bought it, like, and it ended up giving up all the gains, and then later the buying came in and it became a successful breakout. So waiting little bit in this market condition is better than like finding an enter early. So this is again a process which I have like done. Similarly, I have a intraday tools which also helps me. Like this is number of new high and new low happening per seconds seconds in the market. So if I see lot of selling coming in, then I would like tighten my stops or like take profits early. So that's another process for situational awareness which is there basically. I think I can't hear you. Your microphone is off.
Yeah, thank you. And then this is excellent. And one other process that that I think is excellent that you do, it's very similar name to your 20% study, but it's your process for studying trades that have actually moved 20% in 5 days, and it's a way of teaching yourself what to look for to develop an anticipation setup or a similar setup. So yeah, if do you mind talking through that and how you use that to train your eyes for what to look for and build that visual memory.
So what I do is I have a couple of studies, right? And 3 studies I have like basically. So every day when I come into the office, right, and I spend 20 minutes every day. There is not a day when I don't do this, right? As a process, this is again a process, right? And this is all because of my background of process orientation and all. I go and look at stocks which have made 20% move in the last 5 days, right? Because these are the kind of stocks which I want to trade. And I look at what was the starting point, what was the, and I study them to see what kind of a signal would have got me into these stocks. And many of these stocks, many of these trades I would take also, if I miss a trade, then I go back and see. And also this study helps me in finding what works on 5-day time frame, right? One of the biggest finding on a 5-day time frame is it's not really the stock doesn't need to have momentum before making a 5-day move. What it needs to have is just to start up a swing kind of a momentum, and then it works, right? But the bigger thing, the biggest realization is like the capitalization. You will see that all the stocks which are here in this 20% study, and I have been doing this study for many years, and there are Stockbee members who have gone and done a deep dive also on this one. You see capitalization, out of the 80, there are 80 stocks here, right? And you will see that only 5 stocks have a capitalization about 10 billion, right? That's like in a 90% of the stocks or 95% of the stocks have capitalization below 10 billion. So this is a very important criteria, because when you have multiple breakouts, you should select a breakout which has a capitalization below 10 billion or a lower capitalization, because that's likely to make 20% move. Similarly, if you look at the price, right, most of the stocks which will make this kind of a moves will have a price below $20. So this is another thing which I look for in terms of capitalization, price, and sector. If you put a sector here, you will see that this list is dominated by technology, healthcare, and consumer discretionary stock. And this is all year round. Means like you can run this study for weeks after weeks after weeks, and you will see the stocks which is likely to make a 20% study is either going to come from technology sector, healthcare means biotechnology most of the time, and consumer discretionary. Occasionally, like currently, you will find some stocks are from metal and mining, but that's not really. So when you want to know what is the theme which is working, the 20% study tells you this, right? So I have this 20% study, both bullish and bearish side I study. Also it tells you, right, and basically that today, like you have 80 stocks, but on the bearish side only 11 stocks. So it's not like focusing on bearish side is of no use. In addition to this, because I focus more on higher price stocks because of size of account and things like that, I also have a study where I look for a stock which has made a $20 move in 5 days, right? It's a dollar study. So same way. And then I also have a study which I do more on a weekend. This I may not do it daily, but I do it on the weekend, where I look for stocks which have made 50% plus move in last 2 months. 40 days is 2 months of trading, right? And basically, so they have done 50% plus. So I want to see stocks which make 50% move. So on these studies becomes the output, like the output of this and the learnings from these studies then becomes input for developing setups.
Right.
And this is how I found setups like I found a setup EP 9 million from doing this kind of a work. When I found 50% stock, I found that they had a certain magnitude of volume. Or like I found a setup idea called weak structure short, which is a continuation short, by looking at these kind of things.
Yeah, excellent. And one other process that's related to this is if somebody wants to do a deep dive into EP 9 million or any of the setups, or another setup that they find, what's kind of your thought process for studying that, building that intuition, building that pattern recognition, so that they could recognize it in real time as quickly as possible?
So what I do is like for deep dive, right, and I deep dive all these stocks all the time, right, and basically now whenever I'm doing a deep dive on this particular stock, right, the number one question means you need do a deep dive with a certain hypothesis and a certain objective, right, and one of the objectives, where do moves start, right? Because if a stock is going to make a 50% move, the general, I go to all kinds of websites and Twitter and all, and I watch a lot of YouTube videos, and I watch all your interviews also. General conclusion of people who talk about market is that stocks which hold up the best are the one which make the biggest move, right? My 50% study shows that is complete bullshit, because most of the 50% stocks start from low point and they make 50%. So if you want to find stock like GE, it didn't start from it starts from low points kind of a thing. So in order to do a deep dive kind of a thing, right, I have what I always define. If I want to do a deep dive, like on a weekend, supposing if I am doing a deep dive, I define what is the question which I am trying to answer, or what is the problem which I am trying to solve, right? Because you can do a deep dive without an agenda, and then at the end of it, what is the learning? You don't know what is the learning, right? So if I am asking a specific question, saying, look, what catalyst makes stock go up 50%. Right now, that's a specifically focused deep dive, right? So when I start doing this deep dive, I look at like, and then what was the catalyst for Duolingo, right? And it's earnings and sales is the catalyst, right? GEV, again, earnings and sales is the catalyst. Now, what is the catalyst for Wingstop? And so on and so forth. And then I will see where there is a real earnings, real sales, and then you have like a lot of these stocks, like Dave has a real earnings and real sales, but a lot of these stocks which would have made a big move for the year, right? They would be something which is like just some DFDV, right? I don't even know. It will be some catalyst which will be like completely, we launched some treasury for crypto, or we managed to get like two people to go in our spacecraft 300 feet above the ground or things like that, right? So then you know what catalyst will move that, right? Then you start categorizing. You look at out of this say 150 stocks are 50% of, let's say, in last 2 months, right? And you see that look at 50 stocks had real catalyst and 100 stocks had this kind of like a catalyst which is a story catalyst, and the stocks which had story catalyst made 2 times the move of the stocks with real earnings. So why am I wasting my time looking at real earnings, right? So that's the kind of, then again you want to like answer the question, look, and this is another one of my discovery, or not discovery but also observation basically, that most of the stocks which make even a 300% move, they make all that 300% move in less than 2 months. Very few stocks are going to make moves which will last 300% move, but like it will happen in 2 months or 14 days or 15 days. So this answers the question of look, and how do you move your stops on those kind of things, right? Then so these which I discussed with you a couple of times, that concept out of these studies, the concept came in which is like there are magnitude moves and there are duration moves. And I also have studied, like this is not the only thing which I study. I have studied these stocks. I have this whole tab which I do for a deep dive, where I look for these stocks which have gone up for 5 years in a row, 10 years in a row, right? So I have these stocks which is like, say, if you see this particular stock, Ecolab, right? Out of 30 years, right? This is a yearly persistency. So out of 30 years, it has 27 years, it has been positive, right? So what is the criteria? Why? What is the reason why? O'Reilly is a good example of a stock, right? In its entire 33 years or something, there are only 2 negative years. So what is special about this stock? So deep dive can answer these kind of questions, and then that can help you in finding different setups, or it can help you in finding stocks to hold for longer term.
Excellent. And to bring it back to kind of what you were talking about earlier in the presentation, could you just kind of break up your day in terms of when you're doing each process, the situational awareness, the prepping for the EPs and pre-market, all the way through the post-market? I think that'd be a good wrap up.
So I come to my office at 8 a.m. nowadays, right? And I have become lazy. Earlier I used to come at 7 o'clock. Now I start at 8 o'clock, right? So when I come in at 8 o'clock, right, and as soon as I open my computer, the first thing which is going to happen without like this thing is study 20%. Because the study 20% also is one of the inputs in situational awareness, right? So that allows me to see what kind of stocks, what sectors are working and things like that. And then that allows me to answer the situational awareness question. Now, so those 2 tasks are like the primary task takes around, this takes around 15 minutes in the morning, right? And then I start my work for what I call, I have a process which I call as NTRT, MTRT, which is basically a process to find EP and SIPs, right? And basically, so this is where I start looking at earnings and news plays. So this is something where I will go and look at earnings which has been released last night or today morning. I'll look at what stocks are gapping up. And then I'll research. This takes me around 20 minutes, 15 to 20. It's a continuous loop which I am doing. So sometimes we finish and then some breaking news comes in and then you go back and research. But around 15 minutes kind of a thing, which I do this, right? Now once I have done this, I have a good idea how my day is going to be in terms of like what am I going to target, how aggressively I'm going to be buying breakouts and things like that, right? Then I have a visualization. I have set aside a time in the morning. I have a process of visualization, right? So I have these scripts which I have developed for visualization after studying the sports psychology and how the tennis players and all these other players do it and all. So I spend like around 10 minutes visualizing how am I going to be playing this market and how what is that I'm going to do. And it's the visualization is just I'm prepping myself for the trading day in terms of clarifying my ideas, mind, and be very clear kind of a thing, right? And then once that is done, like I am looking for the market to open. And now if I did some like a research and I found some earnings plays and all, then if I want to enter them, right, and I enter a lot of earnings plays using what is called as an OPG order, which is opening price guarantee or market on open order, right? So by 9:20, if I am going to do something for OPG and all, by 9:20 my orders will be in for those stocks. So I would have already put in the orders, and then I'm just going to be watching kind of a thing. And then once 9:30 the market opens, right, I am looking for either a delayed reaction kind of a setup which I am like trying to enter. If I see something starting to like breakout, then I'm going to enter, or I'm going to enter a breakout. Right, and then by 10 o'clock I'm done. By 10:30 means invariably by 10:30 I'm done trading. In terms of most of the time I am like whatever I wanted to enter or things like that I am in, right? And basically so then I go to the gym, I do all my exercise and all, and then the second part of this process starts. So I'm going to put it here so that like we have a continuity on the same slide. Yep. So at around 2 o'clock I start looking at like I say by that time what happens is sometimes you have open positions, they get closed out, or you take a profit and you have more capital. So or like some of the breakouts which you buy, they didn't work out and all. So you start looking at second cycle of okay, I'm going to get into some breakouts. I'm going to run the breakout scan and look for some more breakouts, or some of the dollar breakouts kind of breakouts which are slower in movement. They don't show up early. Those are the kind of breakouts which I will run. But by around 3 o'clock, right, this is also done. By 3 p.m. I look for anticipation. I start running my anticipation scan, and I also have anticipation and a reversal, which is like a pullback kind of a setup which I have developed. So these two I will look at it. If I find some candidate, even if I find it at 3:30, I don't enter them, because if you enter them at 3:30, a lot of time what happens, what looks like a good anticipation candidate deteriorates, right? So I wait, it's just like a killing time till around 3:58, and in 3:58 I put in my orders and I'm done for the day, right? And then the cycle continues next day basically.
Excellent. Well, Pradeep, thank you so much for running through all of this. Do you have any general advice for traders who are earlier in their journeys in terms of creating their processes or thinking about the whole process of creating processes? Any general advice to leave everybody with here today?
So anybody who is a beginner trader or even a struggler trader, right? And the first thing I think there is a hierarchy of decision making to arrive at a process which you need to do. And I think the first decision which you need to do is some time frame decision. Once for all, decide whether you want to be a day trader or a swing trader or a hybrid of day and swing trader, right? Or position trader, like, because once you decide your destination, several flights and several paths will open up.
Right.
So this time frame decision, once that is done, then setup. Because whatever time frame you decide, you want to decide like to become a day trader, you will still need setup. Now once setup idea is, you research setup idea, deep dive, back test, whatever you do, you decided to look for a setup for, let's say for a day trader, let's assume that you decided to become a day trader, right? And basically and you are going to trade setup which is very popular, which is like a shorting small caps, right? which is a very popular setup which day traders use, right? And basically now you need to have a process, because in order to short a small caps, you need to identify stocks which are making very big moves. So you'll have some scans, or you'll have run real-time scans to see stocks which are up 200, 300% kind of a thing. Then you'll need a process to research, because you can't just short it. All these people who do this small cap shorting, they will go to websites like the dilution tracker. They will read the SEC filing. They will see how many warrants are there and what is likelihood of like when that company is going to come out with a secondary filing and things like that, right? So you research, and then you decide these are my 2 or 3 candidates which are like, and I am going to be targeting, and then many of them will go a step further. They will decide their levels. They will probably put in like levels, support, resistance, or whatever. They will draw on that pre-market, so that they know this is the level at which if it starts coming, I'm going to short, or this is the level at which I'll take my stop, or things like that, right? And basically, then there is a process which you need to have to find the shorts. You need to pre-borrow those shorts. So there will be a process to pre-borrow and things like that. So step by step, you will have a process, right? And once you get into a trade, then you will have a process as to how you are going to put the stop. What happens if it gets halted? What happens? All those things, right? And basically, so systematically you have to develop the process. Now, once you have a process, right? Whatever process you do, whatever process you develop, you have to keep iterating and simplifying, because process engineering, I studied process engineering. The first 30 processes which you develop are always junk. You learn by actually implementing the process. On paper you can write a process, but when you implement, you find if it halts, and if it halts 2 times in a row, all your process of saying I'm going to put my stop doesn't really work, because it just like opens 100% above your stop, right? And basically, so process undergo iteration. So iterate the process. Once you have iteration of process, and once you freeze the process, right, then unless there is some reason to change things, don't change the things, right? And because one of the problems for a lot of traders is they just keep changing processes, or just because a fancy tool comes in, they just like go, and tools can be a distraction, right? And every day, you know how this industry is, right? And I get pitched 5 new tools, right? If I start spending my time on the tools, my process will go for a toss. So then freeze the process, and once you have one process and one setup completely under your belt, then start developing, start thinking, look, now this process only requires 1 hour. What can I use my time better for? What other process can I do? What other process can I do to trade differently, and things like that. So it has to be a process. Means ultimately you become a successful trader when you find a process which works for you. Right? Setups are in public domain. There are dime a dozen setup ideas in public domain. The difference between a profitable trader and unprofitable trader is the profitable trader has managed to develop a process which works for them, right?
Excellent. Well, Pradeep, thank you again for walking us through all of this. This is excellent. Where can people reach out to you or learn more from you if they'd like to? Obviously, we did the Episodic Pivot Masterclass at TraderLion, but other than that, which you can find on TraderLion.com, where else would you point people to?
I have Twitter is where a lot of people contact me. YouTube, my blog, or people just membership is one of the option. But even if you are not a member, most of the time, right, and if somebody contacts me and asks me a question, I may not be able to answer that in 1 hour, but I try and answer every single email, every single DM. I try and answer within a week. Expecting me to answer it same day is not going to happen because of the volume, but I answer all the questions which people have, basically all the time, even if they are non-members. I answer all questions.
Excellent. Well, Pradeep, thank you again for being a part of this and for sharing all this. This was excellent. To everybody watching, make sure you check out the resources that Pradeep mentioned. You can check out his blog, of course, Stockbee, and we'll have the link to his Twitter in the description as well. So, Pradeep, thank you again so much for being a part of the conference, and we'll see you guys in the next one. Cheers.
Thank you.